Okay, this is an update. It is Wednesday, May 24th, 2017. Trying to get the exact time here. It's 9:24 p.m. New York time. So we're just about into the rollover for Thursday. And right now we're looking at the dollar. This is the daily time frame for the dollar index. So I'll go and review the last one. I received a couple of emails about the last trade. So this was the last trade that I had open with the trade copier, the dollar yen. Again, no losing trades. We haven't had any losing trades in about 2 months, I think. It's been at least 2 months. So, but then again, we've had fewer trades. You can see with the consolidation. So I want to remind everybody that when, especially if you're considering using the trade copier service, that when I see consolidation like this, I'm going to get fewer trade signals. Now, if you're following along with my trading system and you're familiar with the HL30, you know that with the HL30, and you would probably look for it here with some of this activity where I'm rolling my mouse around right here. So this is the start of the new week right here, this dotted line. So this is a 1 hour time frame, but with all of this consolidation, with each day that passes, sometimes students will they'll start looking for the HL30. But I only trade the HL30 once in a new range of consolidation. I know that the following day, if consolidation continues, it might show up because we're trading basically a bounce with the HL30. We're trading a bounce off of support or resistance. So it's possible that if it stays inside a consolidation, it could trigger and set up another HL30. But very often what happens is the longer consolidation continues, the less predictable it seems to be. Now, I'm not saying that you can't see and clearly define consolidation, because you can very often if it's appropriate. If it's the right consolidation that I'm talking about, very often you can qualify that consolidation. So we have a low here from last week and a high, and then everything goes sideways for a few days. And what I'm talking about as far as it becomes less reliable, the movement, it's if I see a candle pattern, like an engulfing bearish candle pattern or something like that, or an evening star pattern, the distance that it travels down isn't always as predictable as I would prefer it to be, or I need it to be in order to execute the HL30. Because with the HL30, I'm using a very fixed stop loss. A 20 pip stop, 20 pip target on the majors, well, that's a relatively small stop. I mean, I know that some people are out there scalping and using smaller stop loss placement, but in order to allow price to move around and to get where it needs to go, and I'm going to show you that here with this example. That's why it's such a perfect example to use this last trade here. The more movement it needs, or the time that it takes, it's going to bounce around. It's going to set up some signals like engulfing or bearish or bullish engulfing, evening stars, morning stars. It's going to set that up, but sometimes they don't move 20 pips. Sometimes they'll only move 12 pips. And then they'll turn around and come back down or go back up and then stop you out prematurely and then go back down and then hit the target. And that's not the optimum environment to trade the HL30. That's not a good environment, because you can't, very often with trades, I find signals, and you can kind of hear me struggle with this in my voice, because it's not easy thing. It's not an easy concept to understand, because I went through this the first year of my trading career. Back in 2001, I was trying to trade the news. I was trying to trade candle patterns. I was trying to trade it all. And I didn't care. I mean, I was pretty much sleeping with the computer next to my head, on my nightstand when I would go to sleep. I didn't want to miss any trades. I wanted to trade everything. And you have to know when to just leave it alone, when to leave price alone, when to stop trading, based on the system that you're using. Now, just because I don't find a trade doesn't mean that somebody else can't. They certainly can, because there are different ways to trade. The only thing I can do is control my behavior and trade the only system that I know or that I'm comfortable with. And the system and the trading behavior that I have now after all of these years of trading is also as a result of my lifestyle, my experience, frustration, my confidence, just who I've grown to be as a trader. I can look at the charts and I can say to myself, well, if it looks like a lot of consolidation, I remember the day when I wanted to trade everything, thinking I needed a lot of money and I wanted to make a lot of money quickly. But it was going to come to me no matter what, as long as I behaved correctly and I managed and I controlled my behavior. I don't and you shouldn't get into trades that you're not too sure how far price is going to go. You can't qualify the movement or what's causing it. You need to look for better opportunities. Looking for better opportunities means that you're going to obviously minimize the number of trades that you have, but you're looking for better opportunities. You're looking for more predictable movement. And it is hard in the beginning, not only to behave that way and to follow that plan, but to know what is predictable movement, what would cause predictable movement. There's a lot that goes into that. Now, minimizing the trading that you're doing when price is inside a consolidation, you're obviously going to have fewer trades, but you're not going to have that choppy where you win on one and you lose on another, and then you lose on another, and then you win on two more, and then you end up scalping, and then you change your take profit target levels. If you start to change everything every single time you get into a trade, now you're going down a different path, and now you're not following any kind of system. It's, you might have a signal that gives you an entry, but if you're changing your targets, you're changing your stops, that's not anything that's going to give you predictability and reliability over the long term. I've been trading since 2001, and this is the way I do it. And I cannot tell you that this is the only way that it's going to work, but it's the only way that works for me. And I can certainly tell you that there are some basic principles that, regardless of whether you use my system or somebody else's trading system, the principles behind it are what is going to keep you in the game. That's going to help you make as much money as you possibly can. One of the basic principles is that if you don't see any setups that look reliable for the particular trading system that you're using, then don't trade. I know it's hard. I know how hard it is. I remember, people would say, sit on your hands. I try sitting on my hands. I tried playing PlayStation. I tried playing the guitar when instead of while I was sitting at my desk looking for a trade. I tried everything to try to distract myself. But the only thing that worked for me after a while was just turning off the computer and walking away. I know that there's also that fear as a trader that what if I miss the big trade? What if I miss the big move? What if something happens? And then you sit down at your desk later on if you do walk away and you think, wow, I could have had this and I could have had that. You're always going to look at it like that. I mean, I look at, I go back a couple of days when I see consolidation like this, and then sometimes if I miss something, I think, okay, well, I could have had that. Well, over time, just know that if you stay in this business long enough, it's going to get easier and easier for you to accept not trading that and being okay with it. Be okay with the fact that you are not going to catch every trade, and you probably shouldn't, especially in the beginning. So please be aware of that. So with consolidation, I know that there's going to be a few HL30s, at least the pattern will set up, and they might even have confirmation with the CCI indicator. But again, the longer consolidation remains inside of the same consolidation, I'm going to stay away from HL30s. I'm only going to trade the first one. Anything else after that is a different strategy altogether, and I don't want to trade it. So I wait, and I wait, and I wait, and I wait. A few weeks ago, I had really fewer trading signals, and everybody was talking about it, that they were waiting for breakouts. Nothing was happening. It was really slow. In those moments when you sit at the computer too long and you're looking for trades too hard, you're more likely to make mistakes and just jump in because you want something to do and because you want a trade and you're hoping it'll work. And those are the trades that generally don't work out the way you want them to. And then at the end of the week, you look back and you think to yourself, why did I execute all those trades? I could have just taken, 3 trades or 4 or 5 trades instead of 17 and had 10 losing trades or, 7, or 12 losing trades and just a few winning trades. Don't do that to yourself. It's stressful. It chews away at your profitability and your capital balance that you have. That's your inventory. I refer to our trading accounts and the balance that we have in it as our inventory. It's like we're operating a business, a restaurant, a retail store. You need inventory in order to stay in business, and you need money in order to stay in business. And what you want is growth. And you've got to trade these selected better opportunities. Stay away from the sloppy, choppy mess that we see sometimes, especially as we move into the summer months. I say this every year, just about this time. Every summer produces the highest profitable opportunities for us. We get more trades and we get more winning trades. The breakouts are more reliable. The continuation breakout trades pay over and over and over again. It's just a better opportunity. The summer months just produce better opportunities, and it runs until about October or November. So be prepared. It's going to be a good summer. So the last trade that I had, this took like over 13 hours, I believe, and it finally hit that target just above the 112 level, and then that was it. It was just a matter of closing it, but waiting for it. It just you can see that overall it's really not going too far. So just to give you an idea of how this will also give you an idea of how long some of these trades will actually take. It's not anything that I can control. All I can do is just manage the trade. I cannot control the price structure, the movement, anything like that. Um, I tried. I tried for years. I tried kicking the bottom of my desk, hoping the price would go up, and I pounded on the top of my computer screen, hoping that price would drop back down, and it never works. So don't get involved in any of that thinking. Just it'll be there, but just know that the more you work on how you think and controlling yourself, and at least be aware, that other people are thinking the same thing you are, and we've worked through, if anybody's lasted long enough, we've worked through those probably those same issues that you're going through now. So just have, faith in the fact that there are other people that are struggling just like you. And again, if you're not careful, you can blow up your trading account, lose all your money. People are going to get discouraged in you, and you might quit as a trader. And trading is one of the most fantastic opportunities that I've ever put myself in. I mean, I've made more money as a trader than I've ever made doing anything else in my life. It's allowed me the flexibility to go wherever I want to go, do whatever I want to do, trade from wherever I want to trade. And it's just an awesome, awesome opportunity and experience that you should give yourself. You should give your family if you have one. It's just so rewarding. And the way that I have changed as an individual because of my trader experience, I could go on and on and on with another video, but I don't want to waste your time with that. I'm sorry about that. So this was the last trade that we had with the trade copier. Now we're looking for opportunities after the rollover here to make sure, again, if we're going to trade an HL30 or anything like that, a bounce off of support or resistance, that it's going to provide us with the best opportunities. Now I want to go over here to the dollar. We started off here with the dollar, and I mentioned that I would do updates on this one every so often, maybe at least once a week, and release those to the public. But to the private trading group, we're taking a look at this every day. And again, this is the dollar daily index. Now, you'll notice something pretty interesting. We've got a peak up here, and we're moving down here. I get the question a lot how I use the Fibonacci tool and the extension tool. So I talk about this a lot in my training in the members area, and I have just so many videos over year after year, trade after trade, 1 hour. Well, the smaller time frame you go, the more careful you have to be with its predictability. You really have to narrow in on the right price swing. And I remember hearing that when I first started trading and I first started using the Fibonacci tool. I remember reading and hearing people say that in chat rooms. You have to be using the right price swing. You have to look for this, you have to look for that. And if you don't have any experience to compare that to know what they mean by that, then you're just going to have to learn the hard way. That's what happened to me. I had to learn the hard way. I had to test it with real money. Basically, what I want you to see, though, is that the larger time frame you go, 4 hour daily time frame, the easier it is to see where you draw the Fibonacci tool using the most appropriate and most reliable A-B price swing, because that's another video in my training course, is the ABC price swing method. That's very important. You need to know where to find that first ABC that starts the beginning of a new downtrend or the new uptrend. So you can see how just by simply, and very often you don't always know that that's the way it's going to be. I mean, if I was to detach this and we went back over here to the beginning when this was just forming, it looks like it could probably be a reversal up here at that point. I mean, this is going all the way back to December 2016, going into January 2017. And what we have here is the possibility of a reversal, but you don't really know. We still need more information. We still have the last C low here, or new A, if it's going to continue in a trend. And then eventually it ends up closing down below that B low down here. It ends up taking out that C low. It ends up taking out that C low, and it starts a new trend, a new A high, B low, C retracement. It hits the 618, bounces around a few times, and then starts to continue down a little bit lower. Every time, I mean, when we see a new low, a new relative low, we expect a pullback. Sometimes they can be retests of deeper Fibonacci retracement levels. That's one of the other reasons I'm not going to get into too much depth, but we talk about this in one of the training videos, that I'm really careful when I trade a 382 bounce. because very often it'll move down, take out the low a little bit lower, and then turn and go back up to the 618. That's the most reliable area right in here, is that 618 for me. So anyway, you'll notice how this is very predictable. Using this Fibonacci tool, the A high, B low, 618. There's the first extension. We've got a few other extensions down here, extension targets, and here we're sitting really, really close to it. I mean, just a couple of days ago, we're just getting closer and closer to that 96.38. And this has been sitting here for months, this price target here. We keep reviewing this. We keep talking about this. Now, the closer we get to that 96.38, the more careful I want to be, because it is possible that it could stop here and not hit that 96.38 on the number and then turn around and go back up again. That is a possibility. Anything's possible, first of all. But if it takes out that low, it'll probably continue down to the next target. I mean, and then we also have to blend things with not only extension targets, but also major psychological levels. Here we got the 95 level on the dollar index. This is a daily time frame again. So please be aware of that. And then overall, it could, excuse me, it could go all the way back down here to this low from April of last year, 2016. That's also a possibility. So please be really careful. When we get into these positions and we keep expecting the dollar to continue lower, remember that the closer we get to these extension targets, the more likely it is that we could see a sharper reversal, a sharp retracement. Not necessarily the trend reversal, but a sharp reversal that if you're using a fixed stop, be careful. Take profits is what I'm getting at. When we notice that the trend is still intact, back up here a few days or a few weeks ago, and it's trending, and we have this as a price target, we know that we can hold on to the trades a little bit longer during the day. And we can find, for example, if we're trading the continuation breakout trade on a breakout, we can hold for that 55 pip target on the majors or the 150 pip target on the euro yen if it sets up that way. That's what I'm getting at, is if we still have more room and there's distance on these overall larger price swing targets, then we can hold on to those trades appropriately. And the reason I'm saying this is because I kept getting the question, should we scale out right now? Because there are some bigger moves that people are still holding on to, students are holding on to, and they want to know, should they scale? When we get closer to the target, that's when I recommend definitely scaling out of a position and being prepared for the fact that you could see a sharp pullback or a snapback. Just as a reaction. It could be the news. It could be something that happens and people think, okay, that's it. That's the bottom on the dollar. Let's turn it around. And then it might look like that for a day or two, and then it stops and comes back down and resumes back down here to the 96. It's just a possibility. So I'm just saying be prepared and make sure that you lock in profits a lot quicker and a lot tighter on your take profit levels. Make sure you lock in those profits the closer you get to these bigger daily time frame extension targets. People are looking at this as well. People are doing the same thing. There's people out there that are looking at this, and this 618, these extension targets, these are highly predictive. They repeat over and over again. You can see with this one from last year of April, we had that new A low, B high. Again, 618 bounces around. That one went down to about the 786, but still the candles held right around that 618 retracement level. These were our extension targets. And you can see how it topped out here, 102.50, and it bounces around a little bit up here and then starts to move back down. They repeat over and over and over again, and they're more reliable on the 4-hour and daily time frame. You can use them on the 1 hour, but the 1 hour, if you look at things, you got to be really careful. You got to make sure you lock in profits. 1 hour can be a little more choppy than looking at the daily chart, obviously. So that's our update here on the dollar index. As far as, do I think it's going to go any lower? I think it certainly can. I think that if it eventually picks up enough momentum, we watch the news, we get economic data, political events, things like that, I think it can go lower. But will it? I'm not really too sure. Here is where I start to get really, really cautious at these levels. When we get closer and closer to this level, it could just blow out that 96.38 and just keep dropping. That's also a possibility. But for right now, I want to play it carefully. I want to play it cautiously. And that might also show up in the 30-minute and the 1 hour time frame that we're using to day trade, because we're going to see a little more tighter ranges of consolidation. So it's that indecision. And if we open this up just a little bit, you can see these candles, these daily candles. We've got, a bearish candle, then a bullish candle, then a bearish candle, and now it looks like it's popping back up. And it could just go sideways for the rest of the week. And, these daily candles could just continue inside of this range, which obviously is going to translate into what we see on the daily time frame. I'm sorry, the 1 hour time frame and the 30 minutes. So please be very careful. Make sure that we lock in some profits. Again, with consolidation, I can't tell you for sure that we're going to get a lot of trades. We might get fewer trades until this trend resumes again. So we got to be really careful with that. In the next video, I'll be doing some updates on the commodity trades and the pound dollar.